Solana has captured the imagination of thousands of investors who see it as the blockchain of speed, innovation, and unstoppable momentum. But when people start talking about the possibility of Solana reaching $1,000 by 2026, it is necessary to slow down, breathe, and analyze what is realistic instead of what is simply exciting to hear. The idea sounds incredible, the kind of prediction that can go viral easily, but the economic foundation behind such a number is much heavier than many realize, because for Solana to hit $1,000 it would need to grow its market cap to levels equivalent to the biggest tech giants on the planet. That type of growth does not happen magically, and it certainly does not happen in a 2-year window unless there is a historic, never-before-seen explosion of global liquidity flowing directly into crypto. Solana has done many things right, its ecosystem has expanded fast, and developers seem highly motivated, but none of these achievements guarantee the vertical, almost unrealistic acceleration that a target like $1,000 demands. Even if the next bull market is powerful, even if Bitcoin reaches new all-time highs and institutions step in, Solana would still face competition from Ethereum, from Layer 2 solutions, from emerging chains, and from every narrative fighting for attention in a crowded market. Investors often forget that hype is temporary while valuation is mathematical, and mathematics is much more difficult to bend than emotions or excitement on social media. Solana's supply increases over time, and even though the burn mechanism helps reduce inflation, the circulating supply is still growing, which adds natural weight to the price and creates resistance against extreme targets. For Solana to reach $1,000 by 2026, adoption would need to move from millions of users to hundreds of millions, something that requires partnerships, regulation clarity, real-world use cases, and infrastructure on a global scale. This type of mass adoption does not unfold in 2 quick years. It evolves slowly through market cycles, through setbacks, and through long periods of testing and upgrading the network. Solana has a history of congestion and outages that, while improving, still raise caution among institutional players who demand absolute reliability before allocating billions. And without institutional capital entering aggressively and consistently, it is nearly impossible for a blockchain to climb into trillion-dollar territory within such a short time frame. Every major crypto bull run has shown that altcoins experience violent corrections along the way, sometimes losing 30, 40, or even 60% of their gains before recovering, and these corrections naturally delay any extreme price goal. People love to point at past performance and say that Solana rose from a few dollars to hundreds before, but comparing young market growth to mature market growth is misleading, because each cycle becomes more difficult as the asset gets bigger. A jump from 10 billion to 20 billion is achievable, but a jump from 200 billion to 1 trillion is a completely different beast with far more resistance and far more scrutiny. The global macro environment also plays a significant role, with inflation, interest rate uncertainty, geopolitical tensions, and regulatory movements creating a climate that does not favor explosive, unchecked growth. Crypto thrives when money is cheap, when risk is rewarded, and when global sentiment is optimistic, but the landscape heading into 2026 appears to be mixed at best, with central banks still cautious and many countries increasing oversight on digital assets. Even if Solana maintains strong momentum, even if developers continue migrating to the ecosystem, the distance between today's valuation and the one required for a $1,000 price point is simply too massive to bridge in just 2 years. It would require not only investor enthusiasm but also perfect market conditions, huge corporate integration, sustained narrative dominance, and regulatory green lights that at the moment are nowhere close to being guaranteed. This does not mean Solana is doomed or weak. On the contrary, it remains one of the most promising and resilient blockchains in the entire industry, but being promising does not automatically justify a $1,000 prediction for 2026. Realistic scenarios show strong growth, healthy expansion, and respectable price appreciation, but not the type of astronomical jump that crosses psychological and economic thresholds reserved for the absolute giants of global finance. Long term, Solana may very well reach levels that surprise everyone, because innovation tends to reward the chains that move fast, evolve consistently, and build strong communities, but long-term does not mean 2026. It means the end of the decade or even the early 2030s, when adoption, regulation, and global market cycles have matured enough to support a trillion-dollar blockchain beyond hype alone. The smart investor does not chase fantasies, he studies probabilities, market structure, risk, and liquidity flows, and based on all those factors, the path to $1,000 is more of a distant possibility than a near-term target. Believing in Solana is not the problem, expecting miracles on unrealistic timelines is. The best strategy is to stay informed, stay grounded, and understand that extraordinary price targets require extraordinary conditions, and those conditions are not aligned for Solana in 2026.